Welcome to the deep dive. Today, we're plunging into how the traditional quest for alpha, those market-beating returns every investor dreams of, is being radically reshaped by cutting-edge technology. We're sort of moving beyond just intuition, aren't we? Into a realm driven by pure, sophisticated data. Our mission today is to really uncover how advanced algorithmic trading, specifically machine learning, is making, well, significant waves in finance. And we'll be using the fascinating case of Coupang Inc., ticker CPNG, the e-commerce powerhouse in South Korea as our main example. We've got insights drawn from a recent Alpha Stocks series article and a detailed company profile so we can understand both the power of the tech and the incredible story of the company itself. So, okay, we're talking about chasing alpha with data, but what does that actually mean for how investment decisions get made day to day? How are these advanced algorithms rewriting the market rules beyond just, standard fundamental or technical analysis?
Well, think of quantitative intelligence as maybe the ultimate analytical superpower for finance. It's all about deploying these super smart algorithms that can sift through just oceans of data. I mean, literally trillions of data points. They find patterns and opportunities that, frankly, no human eye, no matter how skilled, could possibly hope to see. It's fundamentally shifting investment from, let's say, an art to a more rigorous data-driven science. And within this broad category, we primarily focus on machine learning, or ML, and alpha intelligence, or AI models. Both use these sophisticated algorithms to analyze vast data sets and execute trades.
Okay, ML and AI models.
Exactly. But what's truly fascinating, and something our analysis really highlights, is this critical distinction emerging between the two. The machine learning model we're looking at here isn't just about spotting patterns. It seems to be engineered to reflect even more comprehensive market data. And crucially, it incorporates advanced intelligence specifically for risk management.
Ah, risk management. That sounds key.
It is. It operates almost like an advanced risk architect,
Yeah.
you could say. It doesn't just see a promising path. It's simultaneously mapping out every potential pothole and detour, dynamically rerouting to maximize safe, profitable navigation. It's a bit like having a co-pilot that's always calculating the worst-case scenario and building hedges against it, not just chasing the absolute fastest route.
Right.
And this ability, this integration of robust risk management, that's what seems to give it a significant edge in real-world trading. It goes beyond just spotting the opportunity.
That distinction regarding risk management really is critical. So if these models are constantly evolving, learning, does that imply a sort of constant arms race where the best model today might be, well, obsolete tomorrow?
Oh, absolutely. It's a continuous evolution, no doubt about it. The markets themselves are dynamic, incredibly dynamic, and so the algorithms have to be too. What works exceptionally well one quarter might need fine-tuning the next. But the underlying principles in data integration, adaptive learning, it means these ML models are built to evolve. They aren't just static rule sets. So it's less about finding the single best model forever and more about who has the most sophisticated and crucially adaptable approach to integrate new data and learn from market shifts faster than others.
Right. Adaptability is key. So the power of this quantitative intelligence, it's most evident when we look at real-world results, I suppose. What did the data from CPNG's actual performance say between late 2023 and mid-2025 reveal about what these models can do?
Yeah, the numbers from Coupang's performance during that period are genuinely compelling, really eye-opening.
Right.
When an ML-based stock trading model was applied to CPNG, it achieved a remarkable 122.61% return on investment.
Wow, 122%.
Exactly. Now, for comparison, an alpha intelligence or AI-based model also performed strongly, generating 95.62% ROI. Still very good.
That's impressive, yeah.
But here's the kicker. To truly underscore the significance here, if you had simply adopted a traditional buy and hold strategy for Coupang stock during that exact same time frame, your return would have been just 15.56%.
15% versus over 120%. That's a staggering difference.
It really is. It highlights the significant value these algorithmic strategies can potentially add compared to more passive investment approaches.
Those ROI figures are certainly compelling. It almost sounds like a cheat code for the market for a listener. But what are the major challenges or limitations? It can't be as simple as just plugging these things in, surely.
Oh, you're absolutely right. It's far, far from simple. The challenges are immense. First, you need vast quantities of clean, relevant data. That alone is a huge hurdle. Then designing algorithms that can actually discern true signals from all the market noise, that's incredibly complex. And then, crucially, managing execution risks, slippage, timing,
Right.
and also the potential for overfitting, where a model gets too tailored to past data and then just falls apart when new conditions arise. These models need constant monitoring, constant recalibration, and they require significant computational power. Let's not forget that. The alpha they extract often comes from exploiting really fleeting inefficiencies in the market. So the speed of execution and the precision of the strategy are absolutely paramount.
Okay, so it's complex, resource-intensive, makes sense. And looking back at the Coupang numbers, it wasn't just about the overall ROI difference, was it? You mentioned the ML model's edge extended across other key performance indicators, showing maybe a more fundamental advantage in how it operated. Could you break down those specifics for us?
Of course. Yeah, the ML model's superiority was pretty consistently evident across the board. For instance, its trade signal accuracy, or TSA, that's how often its vital signals were correct, was 78.7%.
Okay, nearly 80% accuracy.
Pretty good. The AI model was very close, actually, at 78.3%. Not much difference there. But then you look at TSR, trade signal accuracy for realized performance. This tells you how often those accurate signals actually translated into profits after accounting for everything, like trading costs, slippage.
The bottom line accuracy.
Exactly. And here, the ML model had a more significant lead, 81.8% compared to the AI's 78.3%.
Okay, that's a clearer gap.
And perhaps, most impressively, the profit factor, or PF. For the ML model, it was an outstanding 11.11.
11.11.
Yep. While the AI model is also strong at 8.64.
A profit factor of over 11. Just to put that into perspective for everyone listening, what does a profit factor of 11.11 truly signify in trading? I mean, is that a rare achievement?
Oh, absolutely. Extremely rare for sustained performance.
Yeah.
Look, a profit factor above 1 just means you're making more from your winning trades than you lose on your losing ones. Basic threshold for profitability.
Right.
But 11.11, that's, well, it's almost unheard of over a significant period. It implies that for every single dollar the model risked or lost on a trade, it was generating over $11 in gross profit on the winning trades.
Incredible efficiency.
Exactly. Incredibly efficient, suggests a highly disciplined trading strategy, minimal waste, and really highly optimized entry and exit points. And there was also this Barrow-wide chart we looked at. It visually confirmed this consistent positive spread. The ML model stayed ahead of both the AI model and the simple buy and hold approach throughout the period.
Okay.
So it wasn't just a fluke or one lucky trade. It was a sustained, remarkable advantage demonstrated over time.
That sustained advantage from the ML model really does highlight the power we're talking about. But to truly understand why Coupang specifically became such an interesting stock for this kind of analysis, we need to peel back the layers on the company itself, don't we? What exactly is Coupang, and what makes its story so compelling, perhaps even for these data-driven algorithms?
Right, good question. So Coupang Inc., it was founded back in 2010 by Bom Kim. It actually started as a daily deals site, sort of like Groupon in the early days.
Oh, okay. I didn't realize that.
Yeah, but they pivoted very quickly, very smartly, to become a comprehensive e-commerce platform. And what truly set Coupang apart, what became its key differentiator, was this incredibly aggressive strategic decision early on to build its own end-to-end logistics infrastructure from the ground up. This is now famously known as Rocket Logistics.
Rocket Logistics.
And they innovated services like Dawn Delivery, you order before midnight, so on your doorstep by 7 a.m., and Rocket Delivery for standard next-day delivery. This wasn't just about convenience. It was about creating a massive logistical moat, a huge barrier to entry, in a very densely populated, highly digital market like South Korea.
That makes sense.
The company went public on the NYSE March 2021. And as of, late July 2025, it's trading around $30.25 a share, market cap somewhere around $55 billion.
Dawn delivery by 7 a.m. I mean, that's almost like magic, isn't it? Waking up to find your stuff already there. Is that the kind of convenience that truly sets them apart? And how on earth did a relatively young company build something so complex so fast?
That's precisely the experience they engineered, and yes, it absolutely sets them apart. They understood that in South Korea, where, time is money and convenience is absolutely king, unparalleled speed and reliability would be the ultimate differentiator.
Right.
Building it quickly, well, that required massive, and I mean massive, capital investment. Hundreds of millions, eventually billions, poured into warehouses, delivery centers, a huge fleet, an army's dedicated drivers, all optimized with advanced tech. It was a very conscious decision to prioritize that infrastructure investment far ahead of competitors, even if it meant deep losses initially. They played the long game for dominance.
A big bet.
A huge bet. And that scale, the density of their network now, is what makes it incredibly difficult, maybe almost impossible, for anyone else to truly replicate in that market. And the team behind this, led by founder Bom Kim, is really characterized by that visionary leadership, but also, importantly, strong operational execution. They know how to build and run complex things. They've consistently shown this willingness to make significant long-term bets on infrastructure and technology. And their innovation continues, like Rocket Fresh for groceries, Coupang Play for streaming, even fintech services now. They pursued a pretty disciplined expansion, mostly focusing laser-like on mastering their core South Korean market before making only tentative moves elsewhere, like Taiwan recently. Now, they've faced challenges, of course, intense competition, navigating complex labor and regulatory environment, but the strategic focus on that end consumer experience has just been unwavering.
So what services do they actually offer consumers there? Beyond just, standard package delivery, what makes them so woven into the fabric of life in South Korea?
It's a really wide array. It aims to capture almost every aspect of a consumer's daily needs. So beyond the flagship Rocket delivery, there's Rocket Fresh for, fresh grocery delivery.
Yeah.
Coupang Eats for restaurant food delivery.
Okay, like DoorDash or Uber Eats.
Exactly. And even Coupang Play, which is a subscription streaming video service, sort of like a Prime Video perk, available to their Rocket Wow members.
Rocket Wow. Is that their membership program?
Yes, and it's key. They also offer integrated fintech services payments, some advertising solutions, and a Coupang marketplace for third-party sellers, much like Amazon has. But what's really interesting is how Rocket Wow isn't just like a loyalty program for discounts. It seems to have tapped into the very fabric of South Korean urban life.
Oh, so?
Well, for many people, it's become less of a premium service and more like an essential utility. It's just deeply embedded in their daily routines because of the sheer convenience and breadth of services tied to it.
Like Prime, but maybe even more integrated locally.
Perhaps, yeah. It creates this behavioral lock-in that's incredibly hard for competitors to break. Their primary customer base is obviously the highly digitized South Korean consumer market, plus a growing number of small and medium businesses using their platform.
And the big question, financially speaking, have their numbers finally caught up to all that rapid growth and investment? Or are they still in that grow-at-all-costs mode?
No, this is actually a significant milestone, and it really underpins their fundamental strength now. Coupang has achieved VIN-GAAP profitability in recent periods.
Okay, that is big.
It is. It's a clear signal of their shift towards sustainable operations after all those years of heavy investment. They've shown robust revenue growth, yes, but also consistent improvement in gross profit. And importantly, positive and growing adjusted EBITDA and free cash flow. Their balance sheet looks quite solid, too, helped by the capital from their IPO and subsequent operations.
Right.
It provides a strong foundation for continued growth and, further strategic investments. This fundamental shift to actual profitability is a major de-risking factor for investors and a testament to that long-term strategy finally paying off.
Okay, profitable, dominant. But who are they actually up against in South Korea? Is it an open field or is it, as you said, a brutal battleground?
Oh, it's definitely a brutal battleground.
Yeah.
Make no mistake. Coupang faces intense competition. You've got established players like Naver, which is a massive internet conglomerate in Korea, to search, e-commerce, everything.
Right, Naver's huge there.
Huge. Then there's Shinsegae Group, a traditional retail giant with its SSG.com and Gmarket platforms. Lotto Group, another retail behemoth. And even the traditional offline retailers who are rapidly, aggressively expanding their online presence. So the competition is fierce. However, Coupang's key competitive advantages remain very clear. First, that unparalleled logistics infrastructure we talked about, genuinely hard for others to replicate at scale.
The moat.
Yeah, exactly, the moat. Second, deep customer loyalty, especially from those Rocket Wow subscription members who get significant perks and are very sticky. And third, that broad ecosystem of integrated services, Eats, Play, Fresh Ale, which keeps customers within their sphere spending more time and money with Coupang. It's really a testament to their operational excellence that they've carved out and maintained such a dominant position, despite these really formidable rivals.
Okay, so putting it all together, what does this really mean? Coupang gets called the Amazon of South Korea all the time. How accurate is that comparison, really? What are the crucial similarities, but maybe more importantly, the crucial differences that investors and you as a listener should really keep in mind?
Yeah, that comparison to Amazon is, well, it's understandable at a surface level. Coupang definitely successfully adopted a similar integrated e-commerce and logistics model. That part is true. Both companies prioritize customer convenience, rapid delivery powered by their own networks, and both started with this almost obsessive focus on the customer experience.
Okay, so the DNA is similar in some ways?
In some ways, yes. But when you dig just a little deeper, the similarities largely start to fade, especially when you consider scale and strategic focus. Coupang's dominance is deep, but it's within South Korea, a single, albeit highly valuable and digital market where they have intense penetration. Amazon, by contrast, is all about global dominance.
Yeah.
North America, Europe, Asia, everywhere.
Right. The scale difference is enormous.
Enormous. Coupang's annual revenue, significant within South Korea, maybe $25 billion to $28 billion range. Amazon's scale, it's just massive. Over $600 billion in annual revenue globally. Different leagues entirely.
Okay.
And their core businesses also diverge quite significantly now. Coupang is still primarily e-commerce with its amazing logistics, though it is growing. Eats, Play, FinTech. Amazon, however, is far, far more diversified. It's Amazon Web Services, AWS, the cloud computing division. That's a colossal profit driver, maybe the main one.
Right. AWS is huge.
Plus, Amazon has huge advertising and subscription service businesses, Prime Video, music, etc., alongside devices, groceries, pharmacy. The diversification is a key difference in their risk profiles and how they make money.
That makes sense. Profitability, too.
Exactly. While Coupang recently achieved GAAP profitability, which is a huge step, Amazon has been highly profitable for years, largely driven by that AWS engine. So you have Amazon as this mature, highly diversified tech giant, while Coupang is still arguably in a strong growth phase, just now proving out its sustainable profitability model.
Got it. Coupang's key differentiator remains that extreme convenience and speed-on delivery optimized for a dense urban market via its own logistics. Amazon's includes AWS dominance and that truly comprehensive global ecosystem like Prime. So yes, Coupang brilliantly replicated and adapted the Amazon model for its specific South Korean context. It's become a formidable local champion, but it's a compelling investment story in its own right, very distinct from Amazon's global empire.
Okay, that distinction is really clear. So tying it all back together now, what does Coupang's performance, especially when analyzed through these advanced ML and AI models, tell us about the future of investing, and maybe more specifically about CPNG's own outlook?
Well, fundamentally, looking at Coupang, the company, its price prospect seems quite positive, I'd say. This is really driven by its dominant position in that high-value, highly digitized market. And crucially, as we discussed, its recent achievement of consistent GAAP profitability. That's a huge validation of their whole business model and long-term strategy.
The continued expansion of its ecosystem, Coupang Eats, Coupang Play, growing advertising services that just adds more revenue streams onto their core platform. Plus, as their volumes grow, they're seeing increasing operational leverage. They're getting more efficient use out of that massive infrastructure they built.
Makes sense.
And any potential for even modest international expansion, maybe into markets like Taiwan where they've dipped a toe,
right,
that could open up totally new growth avenues down the line. However, it's not completely without potential headwinds. They still face that intense competition in South Korea we talked about.
Sure.
And their hyper-growth phase, well, it might naturally start to moderate a bit. That can sometimes impact investor sentiment, even if the underlying business is strong. And there's always the ongoing potential for regulatory scrutiny in e-commerce and logistics sectors, globally, really. Plus, broader economic impacts on consumer spending are always a factor.
Right, the macro picture.
Exactly. But if we connect this back to the bigger picture, the tech story, the success of these ML models in trading CPNG really highlights a powerful and I think undeniable trend. Machine learning algorithms are clearly emerging as a more potent tool, potentially for consistently generating superior returns, definitely for generating more accurate trading signals, especially in dynamic market conditions. Their role in quantitative finance. It's not just a passing fad. It seems very likely to be solidified as these algorithms get even more sophisticated and as data availability just continues to explode across all markets.
So this is really the direction things are heading.
It strongly suggests so. And what's more, as these algorithms potentially become more accessible, maybe through platforms or new tools, we might even see a sort of democratization of sophisticated trading strategies eventually. This might not just be about huge institutional investors anymore. The tools are evolving so quickly. It prompts questions about how maybe retail investors might eventually tap into similar forms of quantitative intelligence.
Right.
Perhaps through AI-driven advisors or platforms. It could reshape the entire investment landscape. This feels like the future of alpha generation unfolding right now.
That really wraps up this deep dive into Coupang and the frontier of algorithmic trading quite nicely. We've seen how a South Korean e-commerce giant's stock can become this fascinating proving ground for the most advanced trading strategies, showcasing the raw power of machine learning in potentially driving market outperformance.
So maybe leave you with this thought. If these machine learning models are indeed proving to be superior tools for generating alpha, for identifying those precise entry and exit points with greater accuracy, what does this really imply for the future role of human intuition, or even traditional fundamental analysis in a market that's becoming truly data-driven? And thinking about companies like Coupang, they've shown that deep market penetration and operational excellence, even in just one concentrated geography, can lead to powerful growth and profitability. Could we see more of these localized champions emerging globally, perhaps optimized and even identified early by these very same advanced analytics? Something to consider.